On May 22nd, Hertz officially filed for Chapter 11 bankruptcy. Shortly after, its stock price plummeted down to 56 cents. However, what was not expected was the 400% gain its stock experienced over the next couple of days. The stock has been on a roller coaster since then, experiencing extreme volatility from none other platform than our very own Robinhood. With that being said, is it time to buy into Hertz, or should we simply keep our hands off and let nature take its course? Let's find out. Hey guys, welcome to my channel. My name is Ali, and today I'll be analyzing Hertz and coming to a conclusion if we should buy into this company or if we should avoid it at all costs. Without further ado, let's get right into it. On May 22nd, Hertz filed for Chapter 11 bankruptcy. And for those of you that don't know, the two most famous bankruptcies are Chapter 7 and Chapter 11. Chapter 7 bankruptcy is a liquidation process that looks to eliminate most of your unsecured debts, such as credit card bills and unpaid medical bills. This type of bankruptcy stops creditors from pursuing collection efforts and calls for the complete shutdown of a business. A trustee is then appointed to liquidate the company's assets and pay back its creditors. Now, Chapter 11 bankruptcy, like the one that Hertz filed for, allows the company to stay in operation while it restructures its debt and creates a payment plan to pay back its creditors. A lot of companies choose to go with Chapter 11 bankruptcy just due to the fact that they can still operate, whereas in Chapter 7 bankruptcy, companies must shut down their businesses immediately. Chapter 11 bankruptcy also tends to be the most expensive since the court has to play a vital role to negotiate obligations and debts. Although it's often difficult for many companies to come back from Chapter 11 bankruptcy, companies like General Motors and United Airlines have come back even stronger. Needless to say, just because a company files for bankruptcy does not mean that it's necessarily done for good. There is still a little bit of hope there, which is why retail investors, people like you and me, have been pouring into this stock and not professionals, because there's a tremendous amount of risk involved. In fact, a very famous investor who you have probably heard of, Carl Icahn, sold his nearly 40% stake in the company. His reasoning behind this was simple. He knows that there is a very long line of creditors that are waiting to get their money back, and they must get their money back before any funds are dispersed to stockholders. See, when a company declares bankruptcy, it has a financial obligation to pay back all of its creditors first before it even pays a penny to its stockholders. More than often, when a company undergoes bankruptcy, shareholders are left with stocks that no longer have any value. In most cases, when a company files for Chapter 11 bankruptcy, they're non-compliant with listing standards and can get delisted from the stock exchange. In fact, Hertz received a notice on May 26th, just days after it had filed for bankruptcy, that it was going to get delisted off the New York Stock Exchange. Shortly after, Hertz decided to appeal the notice and requested a hearing to keep its stock trading on the exchange. Now here's where things start to get interesting. Hertz's financial position right now is looking far from great. According to a court filing, Hertz is $2.7 billion in debt, not including the $14.5 billion in vehicle-related debt. Recently, Hertz asked the court to allow it to issue 246.8 million new shares to raise $1 billion in capital. Now, you may be thinking to yourself, why is a company like Hertz, who's going through bankruptcy, trying to issue new shares? Well, the idea behind this is very simple. In theory, when a company issues stock to the public, in exchange for those stocks, they're getting cash. The more money that Hertz is able to acquire during this process, the less work it will have to do on its own to pay these outstanding balances. Typically, when a company is going through Chapter 11 bankruptcy and is looking to restructure its debt, the funds that are offered to them come with extremely high interest rates. Hertz thought to itself that since our stock is so volatile right now and there's a lot of volume, why don't we issue some new shares so we can raise some more capital, which in theory reduces the amount that we'll have to pay back to our creditors. And through the capital raised in these financial markets, there would be no obligation to pay back any creditor. Because after all, this is an investment. An investment involves risk, right? You can make money or you can lose money. And in this particular case, it looks like the latter. Even if Hertz managed to raise this capital, there would be no way that it can still pay back all of its creditors unless something miraculous happened. In theory, Hertz saw a way to get access to free capital, so why not take advantage of this opportunity, right? I mean, take a look at this. The company itself said that its shares are probably going to end up worthless. Now, Coming from a company itself, this is a very big red flag. Although the courts did approve Hertz to sell up to $500 million in new stock, the SEC was quick to look into this matter, causing Hertz to pull its original offering. The SEC realized that Hertz was just taking advantage of vulnerable retail investors to raise more capital to reduce its outstanding balances. With all that being said, take a look at this downward trend in the stock price. It looks like the volatility and volume of this stock have really calmed down, and that this stock is not going to be able to get back on its feet until something extraordinary happens. It's important to remember that this is the stock market and it's extremely unpredictable, especially given the recent unprecedented events. We can only analyze the series of events of a company and try to predict what's going to happen next. However, there's no 100% certainty. If you found this video useful, please give it a big thumbs up and subscribe to my channel. Leave a comment down below if you want to see me do more videos like this. And don't forget to get your free stock when you sign up for Robinhood in the description below. That's it for this video. I'll catch you in the next one.